Hey everyone, this is Danielle. Welcome to my Friday Options Expirations live stream. I am pretty sick today, so sorry for the annoying voice. But I'm still here. I'm still trading. I'm still looking at the markets. I work from home, so it's not like I can not trade when I'm sick. But this is a copy of my Mastering the Trade session in our trading room at Simpler Trading. So I'm going to go ahead and get that live stream started. And then basically, you're going to hear questions that are listed in the other trading room, and you're not going to be able to have visibility to them because if you're joining me online, that means you're not a member. But if you want to join us, I'll post the link below because I do stream multiple times a week in our trading room. Hello, everyone in the Mastering the Trade room. How are you doing today? Welcome to the close. Thank you very much. I'm a little sick today, so sorry for the annoying voice, but that's just me, scratchy voice over here. Hello. So as Heather just mentioned right before me, we are going to be going to the money show next week, so I'm not going to be in the trading room, but if you are headed to the money show, make sure you come and say hi. I'm going to go ahead and post the link to it. If you're headed to Las Vegas for the money show next week, make sure you come and say hi. I have 3 talks on Wednesday, February 25th, and a VIP meet and greet and book signing. So I'll go ahead and post the link for that. I don't think they have the full schedule on the website, but I did go ahead and post I posted a newsletter on my X feed. So let's see if I can show you guys that. Where is it? Right here. So this actually has my full schedule for the money show. So I'll go ahead and post that as well. Here is my full schedule with all of the details for the money show. All right. And hopefully I will not be sick by then. You're sick too. I hope you feel better too. Best job, even sick, we can do it. That's right. I know people complain sometimes though. They're like, "Oh, you sound so scratchy and so sick. Why are you on the mic?" And it's like, "Well, because I don't want to bail and make one of my colleagues do my session when I'm capable of doing it. I just sound kind of annoying." Uh. All right, so let's go ahead and start off with taking some requests. There's definitely a lot to go over today. I could just tell my family my Tesla glitched and drove me to Vegas. Oh, Vegas. Where in LA? I live near LA. Las Vegas. It's at the Paris Hotel. Yeah, Heather's gonna be there. TG's gonna be there. It's gonna be a lot of fun. Paris, is that any better? So let's go ahead and start off with the indexes, and then I'll go ahead and get to the requests. So looking at the Nasdaq, we're just in a little bit of an oversold bounce here. We are up on the day, but doesn't really seem like anything too substantial. Yeah, it is 200 points, 0.83%. Yes, we do have a squeeze. Yes, the momentum is shifting higher, but we're still under a pretty critical amount of resistance. So I would just say the upside targets are going to be up into the 21 EMA, the 34 EMA, and then the 50 SMA. So 25,500, that's going to be the key line in the sand, the critical area of resistance right there. If we can get through that, that's the point where I would say, okay, we can start looking for some more bullish trades in tech. But as of right now, it just strikes me as an oversold bounce. If you want to trade the oversold bounce up to those levels, I think that's fine just because you can see the lower time frame charts do have some bullish momentum. We have some green candles here with some incoming volume, looks pretty good. So wouldn't really, complain about trading an oversold bounce there. It's just one of those things where it just doesn't strike me as anything that's that strong. So I can't really say, I really think that it's going to hit all the way up here into 620 because it just strikes me as kind of like a weakish bounce. But that would be the major area of resistance in the Qs. So if you want to trade the QQQs up into maybe like 615, there's probably enough room there, maybe up into 620. Uh, but I'm a little bit more interested on what the market does when it hits those resistance zones. If it hits the resistance zones here and here, and you see, for example, a wick at the top of the candle and it just starts reversing, that's absolutely the spot where I would start getting short and hedging again. Next, let's look at the S&P futures. S&P looks pretty similar here. S&P is in a little bit stronger of a position just because the ticker has traded right up into the 50 simple. So this is a line in the sand, and this is the moment that I'm talking about that is the most important. So if it hits that level and fails, which so far I wouldn't really say it's failing, it's just not breaking the level. Um, but if it hits that level, you get a big wick at the top of the candle, and then you can see on the lower time frame charts that the price is starting to cascade lower. That would be the moment where I'd come in and start placing some more shorts. Now, I would rather short the Nasdaq instead of the S&P, just because the Nasdaq is the weaker link in this situation. But watch out for the S&P because it's been leading, if it starts to fail first, that'll definitely be a heads up. As far as the 0 DTE SPX today, we're right at 6,900. That's a key psychological value and key level. There may be a trade that we can place on this in the second half of the session today, just depending on what the market internals are doing. But yes, obviously 6,900, key psychological value, Friday options expiration. I think it makes sense to look at and use that for a target. But considering the fact that we're up above it right now, the only way to use it for a target would be if we started seeing some bearish action and then you shorted it down into that level. Is that what I'm seeing right now? I don't think it's setting up quite yet, but that doesn't mean that it won't because it's still a little bit early for that end of day move. As of right now, we've had a little bit of buying. The ticks have gone up into the plus 600 level, and the VIX has come down, but it's also been a little bit all over the place, and it has creeped higher for the last about 2 hours or so. So I wouldn't really say that it's an obvious directional move, especially with the way that you've gone higher, lower. It just seems to me like a choppy, choppy consolidating day. So it may just not be the best day for a directional trade. Let me just look at some of these Mag 7 stocks quickly before I get to the requests, because unless these things get it together, it's just going to be really difficult for the NASDAQ to start trading higher. And next week, what we have are some pretty important events, mostly the fact that we have NVIDIA earnings. That's probably gonna be the most important event. I think that's on Wednesday, though, and that's the day that I'm doing all of my talks at the money show. Let's see. Yeah, it's on the 25th. So, I have a keynote, on the main stage, and then I'm doing a presentation about the five-star setup, and then I'm teaching a 2-hour class. So, I don't think I'm gonna be able to do anything with NVIDIA earnings, next week, because I have a book signing right in the middle of all that too. So, I'm probably not gonna be able to do anything with this. Definitely, I'll post after the fact and see what the reaction is and see if there's anything that we can do with it, but this is definitely gonna be the most important event next week. Because it's been in consolidation for so long, we've been in a daily squeeze since all the way back in here, which is about the 15th of January, and then we've also been in a weekly squeeze, since the beginning of November. This ticker has built up a lot of pressure, and the earnings report could absolutely be the moment in time that could be that catalyst that could cause us to break out. So when you're looking at this chart, the upside target is 225 and then 240 and 250. But you have to keep in mind that with earnings, you might try trade lower because a lot of these companies that have come out and reported earnings, even though their earnings reports were strong, the tickers have still pulled back. So I don't know if that's going to be the case for Nvidia. Nvidia is, of course, a leader. Um, but you do have to keep in mind that that's a possibility. I think it's less likely that Nvidia gets hit after earnings just because it hasn't been on a giant tear. A lot of the companies that, pulled back before earnings or after earnings or just right around earnings, like Walmart that we traded this week, um, a lot of these companies rallied really hard going into earnings, and they're just pulling back because it was just way too much. So I feel like with Nvidia, you at least have the fact that it's already in consolidation. It hasn't been on a giant tear. So I'm cautiously bullish on Nvidia, but you have to keep in mind that if the market doesn't react well to Nvidia, don't be surprised if the Nasdaq gets hammered. The other one that's coming up soon is going to be Broadcom. This one's going to be reporting on the 4th. So we still have some time, but in theory, if Nvidia goes well, then you could see a rally on Broadcom going into that earnings report. Now, as far as the rest of the Mag 7 is concerned, you have Microsoft, which has been doing really poorly. It topped out last summer and had a little bit of a double top right here. And then at this point, it's down below all of these areas of resistance. It's just continued to get hammered. And now it's below the $400 strike price, which is a key area of resistance. And it's also a pinning strike for today for options expiration Friday. So if you look at the options expiration Friday, and you can see that there's 17,000 contracts outstanding here. That's significantly higher than the rest of these series. That's why you're seeing just the ticker trade like pretty much right up to that zone. So after options expiration Friday is through, can it hold the $400 price point? I don't think so because it's in a downtrend. It's already come back and it's filled this gap, and it's below $400. So, for all those reasons, this doesn't look very promising. It also has another 195-minute squeeze that's firing to the downside. It has another 15-minute squeeze. It looks like it's going to fire to the downside. So, I think Microsoft is headed down into 375, 380. Now, taking a look at Apple, Apple has broken below support as well, and Apple is one of the strongest names in this space. So, not looking very good for Apple here, because we're now below the 50 simple, the 100 simple, the 21 EMA, 34 EMA. We're just below all the resistance zones. This is like the beginning of the shift in trend. So, um, you know, if there's going to be a Magnificent Seven stock to trade higher, I would probably bet on Nvidia, and then after that, like Apple for this weekly squeeze. Um, But when you're looking at, what you could possibly do with this on a longer term chart, I feel like the weekly squeeze is just starting to consolidate, and it could consolidate for weeks. So you might be in a situation where the daily chart is just really sloppy. As you can see, broke below the 50, then it's up above the 50, then it's below the 50. Um, so when you're looking at all of this, um, it's just a situation where when you see that daily chart so sloppy, I personally like to avoid doing shorter term swing trades because it's not in a good trend on the daily chart, because on that higher time frame weekly chart, you're consolidating into a weekly squeeze. And those weekly squeezes are just some of my absolute favorite um, setups to buy long-term stocks, because those are the setups that usually have, weeks and weeks of upwards price action. But when you're trying to swing trade it on a daily chart, it's just going to be really frustrating to you. So I think I'm going to avoid Apple. The rest of these, Google's trying to recover. I did short it after earnings and I already took profits on that one. It's recovering at this time, which is good, but it has to get up above this 50 simple, which is at the 320 strike price. So, today with options expiration Friday, this is probably coming up to an open interest strike. Yeah. So you can see that there's like a lot of open interest at the 315 strike and a lot of volume. 33,000 contracts here, 9,000 contracts for open interest. So it looks to me like it's just moving to that strike price. But after this, can it break through 320? Now, we've gotten a lot of questions about, is it time to buy Netflix? I personally would never buy something that looks like this. I think that it's shifted. The trend broke. It had the split. Had a lot of different issues. This was around the time where Elon was mentioning like boycott Netflix, which that kind of started this, but ultimately um, I think they stopped announcing their subscriber numbers was something else that happened around this earnings report. Sometimes if I can't remember exactly what happened on an earnings report when a pattern shifts, I just go back and I search that date. I used to use Google where I would just say, "Hey, tell me about this earnings report that occurred on July 17th." But now with AI, it's so much easier to just use AI where you can just say, "Hey, summarize the earnings report from that date," because that was where everything really changed for Netflix. But yes, I still use Netflix all the time, but I'm not going to buy the stock when it's in this downtrend like this. So I think the only thing to do with it is if it rallies up into resistance and has a squeeze, I think we can short it in the direction of the trend, but it just doesn't strike me as anything I want to buy. Meta. Meta has also broken into um I wouldn't really, I mean, yes, it is somewhat of a downtrend, but it's just extremely sloppy. So this was one that was so much fun to trade, this rally, but at this point, this thing is just all over the place, and this has everything to do with earnings. Major gap up here, major gap down here, major gap up here. If it was going to recover, it would have needed to recover after this earnings report, but it's only sold off ever since. So at this point, I don't really have any swing trades on Meta. So that pretty much gets me through like the most important Magnificent Seven names. Um, let's go ahead and take some of the requests. Reddit, this has been a ticker that I've wanted to buy. I think that I think it's somewhat unfairly may have gotten caught up in the software sell off. Um, Reddit, I feel like Reddit's like a really unique platform. I personally really like Reddit. Caught my 12-year-old trying to use Reddit. It was really funny. Um, but it's just one of these things where I wanted to buy it at this 50 simple on the weekly chart because of this weekly squeeze. And then what happened was that level broke. So with that critical trend zone breaking, that does make it change my opinion. Um, because I like to buy stocks that are in the direction of the trend. So I do like the name. I feel like the earnings reports overall have been doing really well. And if you look at the EPS growth, you can see, back at this quarter, they were losing money and then they started making money. And then if you look at this quarter, it's like it went from making 16 cents a share to 36 cents. Okay, that's great. This one was down to 13 cents, so not a perfect trajectory, but then you're up to 45 cents, and then you're up to 80 cents, and you're up to $1.24. So I like Reddit. From on the fundamental side, I like the platform. I like to use the platform. I'm a little surprised that middle school kids know about it, but I don't know why I should be surprised about that at this point. Um, So I like it. I want to buy long-term shares. I just don't like the way that the technical pattern has broken because when a technical pattern breaks like that, it just makes it really difficult for the stock to recover. And that's one of the reasons why I don't really want to buy Netflix. Um, because it just makes it really difficult for the stock to recover. And you can like the product all you want, you can use the product all you want, but when you're fighting this kind of overhead resistance, it just kind of makes it difficult. So I am planning on buying more shares of stock in this company. One could argue like, well, why would you wait and buy it at a higher price? And that's a good argument. Um, but I just like to buy stocks when they're in a strong technical pattern, they're in a bullish trend. And this one, because it's broken down so much, is just not really doing that right now. So, I could consider starting to dollar cost average around this price and then add more shares once it recovers up above the 200 simple, just because that would be a little bit better of a technical recovery. But obviously, then the price is going to be higher. So pick your poison. But overall, I like it. Walmart. Um, so I own Walmart shares and I'm going to continue holding them. I did post some Walmart shorts this week. I took profits on them yesterday, but if you held the Walmart short that I suggested on CNBC on Tuesday, then it would have been like almost a max pay. So I was taking like 50% profit yesterday. Um, Today, it was like pretty much perfect. So I don't love getting all the way down to the very last day at the wire on a lot of these things, which is why I'll try to like take some more conservative profits on them. But what I had suggested on CNBC on Tuesday was selling the 128 calls um, at a $4 wide spread. And so those would have been at max profit. And then I also was suggesting the 120 butterfly. So bearish butterfly targeting the 120 strike. And, if you look at the options chain, you can see that there's all of this open interest at the 120 strike. You have 12,839 contracts here. And so that one to me was just really standing out. When I was originally placing the trades, there wasn't this much open interest at the 122 strike. So this one is standing out more now. But when I was originally placing the trades on Tuesday, it was definitely this one that was standing out in my mind, which was why I was targeting that zone. Also, because if you look at the pullback zones, for something that's so extended up at this price point, pullback zone into the 34 EMA, like that's just a really good pullback zone because as you can see with this chart, that's the spot that it generally comes back and touches and holds over and over and over again. So that's just a pattern right there. Um, let's look at MU. Danielle, I'm enjoying the Friday close with you. Awesome. Man, I think you found something I need to buy. I was gonna try to stay like pretty light because I'm gonna be traveling next week and I don't like it when I'm traveling and I'm like trying to wrangle children and also wrangle trades, but this one looks perfect. So, um, let's see. You have an earnings report coming up on the 18th. You're up almost 2% today. You're trading at 425. Let's see here. John Deere's is just crazy. Crazy, crazy move. I've been buying John Deere in my long-term stock portfolio and it did nothing for years and then it finally is just exploding, which is great. Um looks like Taylor is posting MU in the trading room as well. Let's see what Taylor's doing. For our MU, call debit spread, manage how you see fit, but I'll be holding the position over the weekend as MU, the chips continue to show signs of relative strength. We'll consider adding to the trade after NVIDIA earnings. Interesting. Okay. So, as far as my setup goes on MU, you can see that the implied volatility is pretty extended at this point, but there's still plenty of time going into earnings, which is going to be on the 18th. It Taylor probably got a better entry than me, I'm guessing, if he's already taking some profits. But for me, coming in here and just now looking at this, better entry obviously would have been down here at the 21 EMA at like 385. But since I'm just now looking at this setup, um, I think you could still get in. I mean, yes, you're up above the 8 EMA. Yes, it's already up 2%. Yes, you would have a better edge at a lower entry, but that doesn't mean that you can't still trade it here. So, just as far as your position sizing is concerned, um, just keep in mind that when you take a higher entry, um, you might have to hold through a little bit more of a pullback. But at this point, this is a bigger stock and you have a 480, 500, and then 512 price target. So there's still plenty of room to trade it to the upside. You're just gonna have to have a little bit of patience if it pulls back. So let's just see what we can do with this. 318. So these are going to be pretty expensive. It's definitely more than I like to spend for a long call personally. So if you look at this, you can see that the Delta 70s in the earnings series are going to be going for $5,300 a piece. So especially when you're taking a little bit later of an entry than what I would like to take, I definitely don't want to spend more than what my risk parameters are going to be. It would be another thing if I was, getting in a little bit later, but typically for a pre-earnings momentum trade, buying the long calls in the earnings series is going to be the best way to trade it, but that doesn't mean you can't do it another way. So, for example, we could do, let's see here. So, if you did it the week before, they're still really expensive, like $4,500 a call. So let's see if we can do it some other way. You could do a debit spread. So let's see if we did like a 60/30 debit spread the week before earnings. That would be like a 415 up into 470. That would give you almost enough room to trade into that price target at 480. So that would capture a break like to a new high. The question is if you can get a good enough spread here. You might have to do let's just see what the spread will look like. Sometimes you just can't get enough liquidity. So for something like this, $2,100 a piece, it's not bad. I mean, you have a pretty wide range here. If we lower this down to 410, I mean, you have a $60 range. So you're spending, $2,400 to capture potentially $60 of upside. So you're basically bringing the cost of the long call and you're cutting it in half. Um, Doing it this way, it is at least $15 in the money. So it does give you a little bit of cushion. Um, I like that decently well. It's still definitely on the more expensive side of a trade. If you wanted to bring it down a little bit and just say, I don't really want to target all the way up into 470. Let me just see if I can bring down the cost a little bit more and let's do 410, 460. At that point, you have a $50 wide debit spread and it's going to be $2,200. So, you definitely just have to think about like how much you want to risk on something, especially when it's already up. What capability do you have to kind of hold it through any kind of up and downward move? Do you have more money left that you can um, add so that you can add on if it pulls back? And then, yeah, the other thing you can do is just say, okay, well, let's just look at a butterfly and see if we can make it even cheaper. My issue was mainly with the liquidity involved, but you have quite a bit of open interest here at the 450 strike. Trading at 425 though, with a $60 expected move. I mean, you might blow past that is the only thing, but let's just see what we can do here. So let's see if we did. I would really prefer to give it up into like 480, but I think it's going to be really expensive. Oh, it's actually not bad. Okay, 420. Yeah, I'm going to do this one. Okay, 420, 480 to 540. So that's going to give me significantly lower um it's going to give me a significantly lower price. So hopefully throughout this demonstration what you have learned is that if you buy a long call it's going to be like $5,000. If you buy a debit spread, it's going to be like 2,500. Now, bringing it down to a butterfly, it's going to be like 1,400, 1,500. So that is what people always ask me like, why do you do butterflies? Well, that's why I like to save money. Um, so, uh, with the price target right here at 480, I mean, I think that makes sense. Like, could it go up into 500? Yeah, it could go up into 500. Could it pull back into 395? Yeah, it could. So you would need to give it room. Um, it could absolutely pull back into 395. And if it did that, I would still need to hold it because, because that's what I would need to do, guys. The spread's not bad. It's $1 on the spread. Let's see if there's a little bit better volume or anything, just a little bit lower. To 410, 450. So if you move it $10, then you're now at like $20. So I think that would be fine too. It'll just give you it would give you like another $10 of space for another $5 of risk. But this one would be more in the money because that would be like a delta 63 at that point. So I usually just make the determination based off of width of the spread, based on the volume and open interest. I think really either one is fine. I think I'm just gonna start a little bit smaller and add to it. So I'm gonna do it this way. All right. Make sure it's in the right account, non-series expiration date. Then I'm gonna take a screenshot. Now, for those of you that are in the trading room, the API alerts just go out automatically, which is great. So then I don't have to type all of that up, which I love. And I'm going to go ahead and take this screenshot and then I'm going to label it and I'm going to send that one out in the trading room too. Upside target for pre-earnings momentum. Mute to 2026. Here is a screenshot of my chart setup in MU. This ticker is 5-star setup. All right, so I posted that chart. Okay, great. Any other questions about that? Other thing that we could do is sell some put credit spreads. I don't know that I really need to add more risk, but if you wanted to, especially just to bring in some premium, you do like a 425, 415, and that's pretty good. That's about a 1-to-1 risk reward. I don't love selling put credit spreads up above the 8 EMA. I just kind of prefer to do it. I would kind of prefer to do it a little bit lower, but this is a really strong setup. Danielle, why the March 13th expiration? That is because I have the earnings report slated at on the 18th. So this one is still showing a question mark right here. So it's not for sure going to be on the 18th. But because I'm doing a butterfly, I like to do that in the series before the earnings series because the earnings series is going to continue rising in implied volatility all the way until the report. And with the butterfly, you want for there to be you want the premium to go down in the center strike and the butterfly, and the continued rise in implied volatility is going to go against the butterfly. So I like to do the pre-earnings momentum trades with the butterfly before earnings, the week before earnings. But if you're going to do a long call, then I would do it in the earnings series, which is the monthly series. Just going to be a little rich for my blood. So Yeah, and I mean, if you want to do the put credit spreads, I think it's fine. You could also do it this week too. Sometimes I'll spread out my risk where I'll do a put credit spread 2 weeks out. That gives you 14 days. You could sell this one right here. 425, 415. So, you're risking like $500 a contract. It's almost 1-to-1 risk reward ratio. And that would give you 14 days. And so basically, um, if you sell that premium, you can bring in some money that kind of like pays for the butterfly if you want to do both. Now, obviously, um, if you do both and the idea as a whole doesn't work and MU just rolls over and dies, then you lose more money, right? But when you layer setups like that, the idea and the way that it works, like when it works, is this one is decaying. And this one right here, if you just sell the premium, you have a max dollar amount that you can earn, like per credit spread. The very max you can earn is $447. So the issue becomes, okay, if it trades up to $550, you only make your $447, right? That's why I like the butterfly, because the butterfly is $60 wide, the most you could ever sell it for is going to be $60. So getting in for 1473, if you sell it for, even if you sell it for a double, that's great, right? Make $1,500 on it. That's a really good conservative price target. But selling it for 30 is only half of the max potential profit, which is at $60. If you do a put credit spread, and you try to get out for like 70% of the max profit is $432 per contract. Does that make sense? Danielle, do you trade micro and macro futures? I used to trade a lot of index futures, and I cashed out one of I cashed out my futures account in 2020 when I was trading a lot of futures. And that was one of the accounts that I closed when I bought a house. And after that, like the market just, it wasn't as volatile for a while. Like in 2021, it was just kind of like, it was trending higher, but it wasn't like the volatility that I was trading in 2020. And then after that, I had two toddlers back to back. And I pretty much just stuck to doing this kind of swing trading where I'm getting in and I'm holding a trade for, 2 weeks, maybe not really 3 weeks, but probably around 2 weeks on average. Uh, just because, when you have little kids, it's not very easy to day trade. So I can day trade, and I did used to day trade futures a lot, but I have a 3-year-old and a 1-year-old now, and um, I have childcare, obviously, but it's just not the same as it used to be. So I don't trade futures as much. Well, I haven't traded futures in a couple years. I've been considering opening my futures account again. Been a few times where I'm like, oh yeah, I should probably fund that again and start trading futures again. My daughter is getting older now, and it's getting easier for sure. She's 16 months old almost. She's very sweet. She's very beautiful, but she's also very needy. So, and both of my kids have bad allergies. So I have a babysitter that comes. My office is in the basement, and I have either grandma or a babysitter that is upstairs with my daughter. And it's just always something. I try to go upstairs and get a water or something. Mommy. Kids are the best. Yeah. And then I started trading a lot more once the 0DTE SPX came out. I just started doing that instead. So that was the other reason why I didn't fund the futures account again, was because most of the time when I do the day trades, I just do the SPX options, but I like trading futures. So I should put that on my I'll put that on my whiteboard. Fund your futures account. And then as far as this spread is concerned, because this price is moving so much right now, it'd probably be better just to move up the spread at this point. I wouldn't be $800 for 682. But yeah, this one's definitely taking off. I want to always try to sell the spreads so that they are um at the money, because that's how you're going to get the most premium decay. But the thing is that um the higher you sell it, you know, obviously you understand how it works when you're selling premium, and the higher you sell it, it's just better if you can sell it around support, which is like around $400. So let's look at SNDK. Looks like that one's on the move too. I could do this one with you guys too before the market closes. Sorry guys, I know it's annoying to listen to somebody that's sick. Keep trying to get good amount of sleep, take my vitamins, but these little germ factories I have just cough all over me. All right, so that one, $800 price point. 195-minute squeeze. One's definitely taking off. This one just had earnings, but pulled back and it's on the move. Let's see what the options cost. Ooh, it's expensive. You're not going to catch me paying this much money for a long option. So let's see what we can do here. Spreads are a little too wide to sell premium. You see that it goes 55.60 by 63. There's just no way you're going to be able to sell that. You could try. I mean, I hate going 28 days out. That's just way too long. Spreads are too wide in that series also. I don't think I'm going to be able to do this one in the options market. I like the setup. It looks great, but I mean, you need enough liquidity in order to trade it in the options market. When you have the spread on the 650 strike, 46.20 by 51.50, and there's only 78 contracts here, there's just not a good way to sell premium. If you guys have another one, give it to me and I'll see if I can trade it. As far as the futures go, right into the end of the day to see if there's any kind of tradable move here. This is at the spot where there could be a good move. Today just hasn't been there's just not really a lot going on here. I mean, I'm kind of surprised with President Trump speaking and everything. Meta is expensive. You bought Netflix at $90 a share. It'll come back. Danielle, why do you think the economy and the market has been in an overall downtrend? The administration's not doing well currently. Um, I mean, I think it has a lot to do with the job. The job market's not good. The housing market, not good. Inflation has been persistent for a long time. Um, Everything is just extremely expensive. When I went to, there was like a couple years where I didn't really travel because I had two babies back to back. And then I finally got back to traveling like last August and I went to New York. And then I went to Orlando for the money show. And then I went to New York again like 2 weeks ago to go see Charles Payne. And I got invited by Public to go to the dinner, which was cool. It's like I just couldn't even believe how expensive things were, especially because I haven't traveled really for a couple of years. It's like you go to the bar and 2 cocktails were $70, and it's like, "What?" Like, no wonder, you see statistics and stuff. It's like, "Oh, people don't drink alcohol anymore." It's like, you wonder why, you know? And then you see all these things like housing market is worse than it was in 2020, and it's like, well, yeah, I mean, the rates have been high for way too long. There's been so many news reports about like Gen Z getting out of college and, they can't get like a good paying job. Um, Both of my brothers have been looking for jobs for a while and there's just like nothing out there. They both have college degrees, they both have experience, like they send out resumes, they go on interviews. Sometimes it's just not, I don't know, I just think it's like an uncertain environment. But then you have the fact that businesses are doing well. I was reading this report that was saying that Amazon is going to be automating away hundreds of thousands of jobs in the next 6 or 7 years due to a combination of AI and robots. And um, I don't know. I just feel like one reason why the stock market continues to do really well is because corporations are still making a lot of money, but they're figuring out how to reduce their expenses by reducing the number of employees they have, by flattening management layers and replacing people. So it's still been really good in the stock market because corporate profits are still going up, right? Um, and then you also have a situation where because of inflation, ooh, this looks like this is ready to go. Gold's ready to go again, guys. um, because inflation's so high, you've had gold and silver on a tear. Like people have got to make some money somewhere. Yeah, this is definitely starting to go again. Silver and gold. Let's see if we could do something with this. The market's gonna close really soon here. I don't see anything for an end of day trade, guys. It just seems it's just doesn't look good. You're pinning at 6,900. I was considering doing a 6,900 butterfly, but there just wasn't really a good, I didn't really feel like there was a good entry for me on it. If you already have a 6,900, great job. But let me see if I can do something with this. Your daughter just graduated FSU December 2nd, 2025, is on her 4th round for an interview for a company in West Palm Beach tomorrow. Nice. Good luck. Good luck. And obviously, it depends on like what is your experience and what is your degree and like all that stuff. Do you like to use the expected move as a target, go less or bigger? So here's a perfect example, okay? Gold has a squeeze, it has incoming volume, it's starting to break out. There's a couple different targets here. The resistance target is going to be at 475. You have another resistance target at 500. And then ultimately you have a target at like 533, but you just want to overlap it with the expected move. So I'm going to have to hurry up because the market's about to close, but I think gold could be back up at 500 by March. 28 days, about a $40 expected move. Gonna have to do this quickly. Look at that open interest. Come on, baby. All right, that's only $6. $5 this way. That's only $8. Let's see if there's enough open interest. Come on. We gotta hurry. Gotta hurry. Yeah, that'll work. Let's do it a little bit more in the money. All right, so I'm going to do this 560, 460, 500, 540. And that's for the March expiration series. Valley looks ripe. Yeah, this one looks really good. This is a cheaper name too, so did a couple expensive trades there. This one doesn't have earnings until April. Target at like 18 and then 20. Daily squeeze, pulled back after earnings. Buyers are coming in. Look at that. Only $1 options. I hate placing a trade right here at the very end of the day, but I guess with the API alerts, it's made it a lot easier. FCX plays well with your GLD idea. Ooh, inflation, gold goes up, recession, gold goes up. People generally do not own stocks or mutual funds outside of their retirement accounts. I was seeing a on Twitter, it was trending the other day that Gen Z has started buying stocks because like they can't own house. Well, I wouldn't say they can't own houses. It's difficult for them to get into the housing market because of a variety of factors. Um, so I was actually seeing that Gen Z is like into buying stocks. And it was saying that the percentage of Gen Z kids that are buying stocks has like tripled in the past couple years because of all of the apps like Public and stuff where you can literally just set it to, hey, like buy Microsoft every Friday. Um so I mean that's what I was reading online. I'm not Gen Z. I have a brother that's Gen Z, but he is pretty broke and does not buy any stocks, which is, according to him, is typical for his age. Can you please quickly cover how to read your VZO? So the VZO is a volume oscillator. And what it does is when you're up in the red zone, it means that it's really extended. It's usually when the volume tops out, when it hits the upper band of the red zone. So usually around that spot, it's telling you, don't get too crazy, because there's only like so much, there's only so much it can do. And it usually starts to pull back. And so once the oscillator starts to break below, that's when you get the pullback. But then when it comes back to the zero line, that's the neutral zone. And it's either going to do one of two things. It's going to break below and you're going to get selling pressure, which in this case, because it's such a strong name, it quickly reversed. Or it's going to come down to the neutral zone and it's a perfect buy the dip. So you see how it came down to the neutral zone and the volume already started going up. The volume is shifting higher, and that gives you just kind of like a perfect little cup and handle kind of pattern. Then you combine that with the squeeze. So you have this earnings move. The earnings move pulled back. It pulled back into the 34 EMA. The momentum is shifting. It's bouncing higher, into that zone. So what you want to see when you're getting into a trade is you want to see the volume shifting. If you're shorting something, like for example, Google, I shorted Google in our trading room last week. So do you see how the volume came up to the red zone and it started reversing? And then you just got this huge, you see the volume overlay as well right here? The volume overlay shows you that there's higher than average volume. So if you're looking at these candles, you can see that that volume had a major spike, but it doesn't show you which direction the volume's going. The volume zone oscillator shows you the direction it's going. So this shows you volume is going up. This shows you there's more volume than normal, right? The oscillator shows you that that volume is down, like it's getting sold, it's getting hammered. Boom, 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 boom. So when a ticker breaks down through support and I can see that the volume is going down, like there's higher than average volume, but it's selling volume, then it's a short. You see what I mean? But then do you see how it bottomed out? This is the first level that it can usually bottom out at, the first green line. Then the bottom here is when it's so oversold, it usually can't go lower. So when it shifts in this direction, that's when the buyers are starting to come in because you get buying volume. And then do you see how today, do you see how the volume candle spiked up? It was greater than average volume. But you can see with the VZO that the volume is going in the upwards direction because people are buying. Does that make sense? A big reason of the mass layoffs by the government at the start of the second term, it is not going to college. Yeah, I mean, it's I'm just saying that yes, there are layoffs everywhere for sure. Government, big tech. I think big tech has especially been flattening a lot of those management layers. Um, you know, it's I just think it's been happening everywhere. I started following this new account. Man, let me see if I can find it. I can't remember her name, but it was a big account that tracks layoffs and like posts them on X every week. See if I can go back and find it for you guys. Booking Holdings will be doing a split early April. I never trade that ticker because if I can spell it right. The price of it is just way too high. So there's just never a good optionable way to trade this ticker because it typically doesn't have enough volume and open interest to trade it. I do like trading tickers that are going to split. I do like looking for a rally going into a split. It's typically a pretty, I always hate to call an idea easy because that's when it'll bite you in the butt. But I do typically like to trade rallies going into a split. However, I don't like to do that on a ticker that is in a downtrend. I like to do it on a ticker that's in a bullish uptrend where people are excited about the split, plus they're excited about the trajectory of the stock. Um, and with this one, it's just so hard to trade in the options market because then it's just at too high of a price point and there's not enough liquidity in the options to trade it. So I would consider trading it after the split, but I definitely don't want to do it now. I mean, especially if you go to a monthly options expiration series and you can see that the at the money strike that's at a key psychological value is $30 wide. It's just too difficult to trade. Your kids are Gen Z, your youngest is 19, the oldest is 34, 6 kids, 4 grandkids. Awesome. Your brother's missing out big time. His generation will see the boom. Yeah, I agree. I mean, I think it's great Gen Z is buying stocks. See, I'm gonna look at this one of FCX that Sam wanted me to look at, and then after that, I'm probably gonna have to sign off. Is anybody coming to Vegas? Nice. This looks really good, Sam. This is the one you were trading? Okay, so it looks like Sam just bought a butterfly 62, 68, 75. Yeah, it looks great. Targeting the previous high. Squeeze. I like it a lot. Nice find, Sam. The Turbo VZO is just based off of volume. So for this one, my shared grid is available for members in the trading room. This same grid without the Squeeze Pro. If you're on the live stream, I'll send you the link where you can get it if you sign up for the trading room. But yeah, if you're in the trading room, you can have it. There's also a free version. Mine is like the upgraded version. So let me go ahead and send the link on the live stream. Many young people can't afford having kids anymore. I know, that's what they say. That is what they say. I think it's really sad because I can't imagine my life not having kids. I mean, it is really expensive. It's expensive, it's difficult, but it's also the best thing that I have ever done. Volume zone oscillator. Like we pay as much as our mortgage for childcare every month. It's not cheap, but it doesn't last forever, you know? They're going to go to school at some point. They can eat spaghetti and macaroni and cheese. They are really expensive, but I also think that I don't know, my grandma just always said, "You just make do with what you have." And my grandma had 8 kids, so and they did not have a lot of money. So the free version of the Turbo VZO is called the Volume Zone Oscillator, and you can just load it into Thinkorswim. Mine is the upgraded version. It goes with my candles and it has the buy and sell arrows when you get major volume buys and major volume sells. It's like a pay raise when they're potty trained. Diapers are so expensive. Yeah, we were really we were really having a rough time over here with 2 kids in diapers at the same time, and one of them that's severely allergic to dairy, so she had to have this really expensive formula because I couldn't make enough milk, which was really difficult. So I was spending like $100 a week in formula, plus another $100 a week in diapers, plus another, you know, they're really, really expensive. But I mean, she's already, now we got her switched to oat milk, and then we have one kid that's now mostly potty trained. So it gets better. Like, yeah, it's really difficult, but it's worth it. And it's funny because people my age, they're like, "You have 3 kids? That's crazy." But it wasn't weird. My mom has 7 siblings. My dad has 4 siblings. It wasn't weird back then. All right, well, I'm gonna go ahead and share the link to my grid in the trading room. If you're in the live stream, um, you can click on the link that I posted. Yeah, go back to eating cereal, no more steak. Yeah, there's not a lot of steak around here. We have steak sometimes, but we spend a lot of money on the kids, so we don't really go out and do like nice dinners or anything like that anymore because we spend a lot of money on the kids. Do you plan on sending them to private kindergarten, elementary school, or public school? So my 12-year-old, I tried to send him to public school and it did not work out. So I actually had to reduce my hours at work and I homeschooled him. I just sent him back to public school this year for 6th grade. Um, and he is thriving. He has straight A's. He loves it. He has great friends. Um, so that did end up working out for him. But um my 3-year-old, my 3-year-old and my 1-year-old both have severe allergies. So I do not want them going to regular school. They both have anaphylactic allergies. And I'm not going to be sending them to a regular public school. So we're probably going to do the same thing. Um, we have a nanny upstairs, we have grandma, we just basically like trade off, and then I do lessons with them. The market closes here at 1. So our 3-year-old can already read. Like he's really, really smart. I think he's going to be way too far ahead by the time kindergarten comes along. So I don't think he's going to be able to go to regular school just because he's really advanced. But also because I don't want him to, because I don't want him to have an allergic reaction at school. The link to my shared grid is down below in the chat in the trading room. I loved homeschooling, spending extra time with the kids. It was a big sacrifice. Yeah, it was definitely a big sacrifice. I can't believe I did it for so many years, but it's like it's already over. It's like now he's in middle school, and I'm really not a fan of the public school, but I mean, he has straight A's, can't really complain. And I made this stock market book for homeschooled kids while I was homeschooling him. So my kids are actually so allergic that they said they cannot do the desensitization because they said that with each exposure, they would get worse. I don't know how that happened, but that's what their allergist, that's what 3 different allergists that I've gone to have told me. Sarah will help him fill out his application to MIT when he's 5. Yeah. So I don't know, we'll see. But, um, did you guys see in the trading room chat that I just posted the link for my shared grid? You're a great mom. We did the same. Spend money for school, for kids, no outing. Yeah, all my money goes to like baseball and all right. Well, I hope everybody has a great weekend. I'll miss you guys when I'm in Las Vegas, but if you're in Vegas, come say hi. Yeah, I'm not gonna pay for a private school. I'll teach my own kids before I pay for that. By homeschooling, you mean you taught every class yourself? I didn't teach every class myself. I did most of them myself, but I used this program. This is a really, really cool homeschool program. It's called OutSchool, and they have all kinds of really cool like life skills classes, entrepreneurship, critical thinking, health classes, languages. My son was doing French. They have computer classes. So I did teach a lot of it, but as he got older, I did more of these classes. Say hi to Carolyn. Yes, yes, I will say hi to her. Yeah, I'm giving out the book for free at the Vegas show if you're coming to it and doing a book signing. Baseball is cheap. I had 2 kids in hockey. One was a goalie. Oh yeah, it's expensive. I'll get the book when I can afford marriage and kids. It's expensive, I know, but you just make do with what you have. All right. Well, I hope everybody has a great weekend and I'll see you next week. Or I guess I'll see you at the end of next week on Friday because I'm not going to be here the rest of the week. But since you guys only come on Friday, anyways, in the live stream, um, I will actually be back here on Friday for the live stream. You have 400K in student loans? What? What are your student loans for? Are you a surgeon or something or a lawyer? Or... Safe travels. Thank you. Thank you. MBA and JD. I always wanted to go to law school, but I never did. Well, I wish you luck. I hope with your degree you're able to eventually pay it back. Help us get rich and make money on the side in the stock market. All right. Well, I hope everybody has a great weekend and I'll see